Today we'll see how to open a store card. A store card can be opened in a sales or a purchase category. Uh, Also, a store card can be of type new or a return. I'll show you all those things in the later part of the video. So this is our store card module. Now uh, go to new store card. So by default it will show you the new store card, but you have the option to change it to return. Right now we are opening a new store card. Select the business unit. So whatever business unit against which you want to open the store card. For example, Grand Hangers. Select the customer. So both your accounts and contacts are mentioned here. You can select any one of them. I'm selecting Anita G. So by default, the Anita G is a contact. So you are and I'm making a sale. So I'm making a sale in a B2C kind of a scenario. The bill date, if not defined separately, will be the current date. If I save it, an automation will be kicked in, and this number will be generated based upon a couple of things. Basically, the business unit code, the financial year, and the sequence number of the transaction. So it will take probably 1 to 2 seconds before this number is generated. So if I do a refresh now, that was not saved. So if you see that this number has been generated, so Ganesh Hangers, sales invoice, financial year, and this is the first store card in sales we are generating. So next time automatically it will be 2. Okay. Now these are the various different things. Probably we'll talk about it in another video. But you directly go to store inventories and then you add items into this store card. Okay. So for example, only the products which belong to this business unit will be shown here. You select an item, basic black hanger. It will show you what are the net quantity, list price, standard cost, and all those things. You have the option to enter whatever numbers you want to enter. So for example, my list price of this item is 16,000. Minus means I'm already short of this. So maybe I'm selling this for a future order. I'm producing something to this. That's why I'm selling it. So I'm making an invoice. Let's assume that the price I want to sell at 16 rupees. The taxes is 18%. It has taken from here. I say okay. Quantity I want to sell 1,000. Now a discount, you want to give a discount on the top of it. Maybe let's say 2% discount, and you press the save button. So by doing so, if you do a refresh now, it is showing you a couple of important things. One is the part cost, the item cost of this part. So when I say item cost, means the total line item cost. So this 16,000 rupees, 16 rupees per item, and you also gave a 2% discount. So 16 minus 2%, whatever be the case, and 50,680 is the line item cost. And if you remember, if you look at this item, this item in 16 rupees, you're at a standard cost of 10 rupees. Standard cost is basically your input cost. Okay, so that means you're making a profit of approximately 6 rupees per item, but you also gave a 2% discount. So 2% on 16 comes out to be 32 paise. Okay, so whatever be the case, that number, it also tells you that on this sale you're making a profit of 5,680 rupees on your input cost, and this is your input cost. So input cost is basically 10 standard cost 10 rupees multiplied by the quantity. So 10 into 1000 becomes your 10,000. So that is the cost, or maybe you can count it as COGS, cost of goods sold. And on that, on the top of it, you are making a profit of 5,680 rupees. So whatever line items you enter in this store card, for every line item you get both the standard cost, that means your input cost, as well as the profit. And those, everything gets accumulated over here. Let me enter one more item, for example. Let's say basic, we entered a basic black hanger. Let's enter a basic hanger gray, which is standard cost is 1250. And my current cost is this. This price is 18. Let's say I will bill it to 18 rupees. Intelligence is showing 18% taxes. Quantity again, let's say 1000. This time I'm giving a discount of, let's assume that I'm having a good margin. I'm giving a discount of 10%, and I save it. And if I open this item now it is showing me my quantity is 1000, my standard cost is 1250. So that means my total line standard cost is 12,500, and I sold at a price of 18 rupees at a discount of 10%. That means 1 rupee 80 paisa discount per item. That comes out to be 16 rupees 20 paise. So whatever be the case, this 3700 becomes my profit earned on this line item, and both of these two line items, profit and standard cost, gets accumulated and in the store card. So my total profit on this store card is 9,380 rupees with an input cost of 22,500. So I'm making a quite good amount of money over here, and the amount of money which I'm going to take, the total billed amount to the customer Anita G, is basically 37,618 rupees. Now, right now this store card is in estimate stage, so this will not go and add up to the respective business units because the store card is still in the active estimate stage. So if you look at, if I refresh Anita G, and if I refresh Ganesh hangers, so let's look at both Ganesh hangers, okay, and let's see this first because it's a sale, so my receivables will go up from 53,290 rupees to, it will add this amount. So let me convert this to an open stage. So that means I am moving beyond my estimations. Okay, so we press save button. So this will take maybe 2-3 seconds because what happened, because there is a lot of automations which gets kicked in. And now you go over here, and when you refresh, because this is the stat right now on my screen, if I refresh, this 53,000 will move up from this 37,000, whatever be the number. Okay, so this has gone from 53,000 to 90,000, so the value has gone up, and accordingly my balance is also adjusted. So in balance in negative means I still need to pay from this business unit. But okay, so overall working capital wise, I'm still in negative, which is a good thing. Okay, if I go to Anita G, okay, oh my bad, sorry. Okay, now if you saw that it has also updated the value from 78,000 or whatever be the case, and it also shows you how much profit I am earning on this customer in total. So basically, whatever store cards you keep on opening against a customer, you will get the profits and the input cost. So for all the customer, you also see that how much the absolute profit I'm making and approximately what is the percentage of profit I'm making on my input cost. Yeah. and this is the balance. So balance positive means a total receivable uh, is uh, is pending on this customer. This credit limit exceeded because we have not set any credit limit. Let's try to set a credit. Let's assume that Anita ji belongs to a family and we are very liberal, so we can give a 5 lakh limit. This is 50,000, my bad, 5 lakh. Okay, and once you refresh it, you will see that this credit limit will become green within limits. So good. And so for every customer, for every vendor, for every business unit, you can set your receivable, credit, and payable limits. And for all business unit as well, if you see the stock value, it shows you standard cost, it shows you the profit you have made so far on this business unit also. It shows you how much amount is balanced. So negative, as I told earlier as well, negative is net payable. So if you look at all these, so I need to pay 1,81,000. This is my receivables. This I have paid and this I have received. So a combination of all these things balance. And you can also look at the definition over here, how it is doing. The calculation of balance is basically the store receivables minus credit note minus amount received, and this is how you calculate the balance. Okay, thanks guys. I'll see you in the next video. Thank you so much.